Hi, I'm Grace. This week could decide whether markets crash or rally. It's not media hype, it's data, emotion, and capital colliding. What happens in the next few days could shape the entire 2025 market.
All major tech giants, Meta, Microsoft, Google, Apple, are set to report earnings this week, with Nvidia right after. AI infrastructure spending has already surpassed $300 billion, and investors are no longer paying for visions, they want profits.
On the surface, markets look confident. Indexes sit near record highs. But underneath that optimism, fear is quietly spreading, because everyone knows, if these earnings miss expectations, the bubble could burst overnight.
Investor sentiment has been swinging between fear and extreme fear. At the same time, the Fed may announce a rate cut, and the upcoming Trump-Xi meeting could shake global trade once again. Analysts warn the current risk-reward balance is fragile. If things go right, great, but if they don't, the downside could be brutal. Every major tech company is expected to post double-digit growth this week. Apple's iPhone 17 sales are up 14% in both the US and China compared to the iPhone 16. Google's stock, even after chip competition, is still near all-time highs, and United, one of Warren Buffett's holdings, is also reporting this week.
But the real issue isn't just growth, it's returns. Nearly 90% of all new capital spending in the S&P 500 is now tied to AI. If those investments don't start producing profit soon, this rally could lose its engine. I'm not saying the market will crash, not yet, but we are entering what I call the truth zone. After a year full of hype, this is where numbers meet narrative.
Reports from Morgan Stanley and Goldman Sachs show that 75% of this year's S&P 500 gains come from AI-related stocks. If their earnings slow, the shock could ripple from chips to cloud and across the entire tech sector.
The key metric now isn't story, it's cash flow, because hype fades, cash flow doesn't lie.